Welcome back to the channel, and as always, if you copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to look today at a company called MP Materials Corporation, ticker MP. MP stands for Mountain Pass, and that's a very important thing because these guys are essentially a mining company with that location as their name. What do they mine is actually different to the typical iron ore or coal products that you would typically see in big established players like BHP Billiton. What these guys do, they mine resources called rare earth oxide, or REO for short, and NdPr, which is neodymium and praseodymium materials. These materials are used for EV and alternative energy sources. So typically you see those especially being used in magnets that form parts of all these devices. So think about different parts of electric vehicles, but also wind turbines and so on. Now, as you can see, a few things stand out in this chart at first glance. First of all, the short interest has increased drastically since March and has remained at elevated levels. And at the same time, if we look at the historic price of the stock, you can see that after a very good run in 2021, and remember the electric vehicle market was booming at that time, it had a very hard downward trajectory in early 2022 up to the state. But of course, we see that this channel, this downward channel here, has now been broken. So the company has actually rallied very hard from 10 to almost 19. I mean, it's currently sitting at 18 and a half. Well, why is that? Why did we have this trajectory? So remember the material that I mentioned before. NdPr is very important for them. And the prices for that commodity fell around 70% from their 2022 peaks. So they went from $150 per kilo to about 50 to 70. So that severely impacted their revenue and margins. And of course, these guys are in the mining business, so there are many competitors in places like China where there are many producers operating at losses. So again, that's the reason why the company struggles so much. But what have they been doing in this period of time? How did they respond? Well, in my view, they made the right decision and they changed their business model to become a more of a high value add juicer. So they're moving away from the pure concentrate sales to China, where there's obviously a lot of demand for electric vehicles and parts. And now they're trying to become an integrated producer of products, right, with a fully integrated supply chain. And that's something that differentiates them from their competitors, not only in China, but also from their only listed Western direct competitor, which is a company in Australia. We'll look into that a little bit later. But in essence, um, their change of business model used to be mine that REO product and sell the concentrate to China customers. And that enabled them to achieve quick revenues, albeit at lower margins. Now they're using this concentrate to convert it into higher value NdPr, which is more complex but more valuable. Okay. Now, earlier this year, and that explains probably some of the downward movement here, they had some issues with production. They had one of their um, production equipment fail due to some damage that caused them to pause production for a few weeks, almost a month actually. And they're saying that the next quarter, which is going to be reported in a few days on the 7th of November, we'll see that fully recovered. So we are seeing that uh, issue, that headwind, sorted for the time being, or at least that's the expectation. At the same time, they think that by the quarter following that, the company will have achieved the trough in the market. Although, arguably, like I said, it seems that we are already seeing that because of this channel breakout here. So, what else are we looking at here? And why 2025 is going to be a tipping point for the company, which has been in a downward trend for years now? Well, the company has been quite strategic in terms of adapting their business model, as I mentioned. And now they foresee the production of this product NDPR to start increasing significantly. Remember, it's not only about the actual production and sales of this product, but also the margins that they achieve with that, which are definitely higher. So in the first quarter of 2024, they sold 131 tons. That was increased to 272 tons on the second quarter. And by the next quarter, which again is going to be reported in a few days, they expect a 50% increase from there. So that is certainly a big jump. We also see a few other catalysts that have bolstered the stock. So if you see here the price from yesterday, the company was up almost 4%, which is definitely very, very good. And that, in my belief, is that the reason that Tesla beat earnings expectations, which obviously signals a potential recovery starting to take shape in the market for electric vehicles, which is, again, one of their main customer markets. So aside from that, the company is in a clear path to cost to optimization. They have learned along the way of their mistakes, and they see the benefits materializing in terms of growing their revenues, which are expected to grow significantly over the next 3 years. So we're looking at triple-digit revenue growth, as well as triple-digit revenue, earnings growth. That is above all their listed competitors. And if we look at the only one equivalent that applies here, it's a company called Linus in Australia. So the valuation on that is a lot lower. Uh, so this company is trading at 432 times next 12 month earnings. Obviously, that sounds incredibly high. If we took the sense of a different kind of metric, we would get a more conservative number. For the purpose of comparison, you have here two very similar companies, and one is literally trading at 10x differential, which signals the willingness of the market to pay for that. And the reasons for that is because it is expected that this company will become fully integrated, will be less dependent on China, and will be closer in terms of becoming an established player. Uh, it will be essentially getting a moat as the only scale Western producer, which is critical for the supply chain security, and is also facing growing ex-China demand, which is one of the big customers of this company, LYC. Of course, with the elections and everything that we see taking place in the world so far, this could also become a company that becomes very, very strategic from a geopolitical perspective. And it could benefit from uh, actions from the government in terms of tariffs, in terms of bolstering domestic production of the product. We have seen that, for example, their competitor, LYC, has secured business with the Department of Defense, which is also the case with MP. But at the same time, MP has successfully diversified their relationships and their revenue base. So they have counted the partnership with Sumitomo, which has given them a broader distribution channel, as well as strategic clients. And of course, we have seen how the reshoring phenomenon, which is bringing back the manufacturing activity to the United States from China, is being a tailwind in other manufacturing sectors. This is also happening here. And if you believe that whether Trump wins or Kamala wins, those sectors are going to be still in high demand and come out of that recession that they're currently in, then definitely this stock could continue going higher. Now, in terms of the challenges, I mentioned that this quarter is expected that the stage two ramp up is expected to be in full swing. Of course, there could be challenges in terms of bringing that to expectations, which are very high at the moment. And of course, the NDPR pricing, this high margin commodity that they sell, could also be a factor that becomes a headwind for them. Of course, the overall health of their customer sectors will be important, and the new structure rollout and the pace at which it's executed will be a differentiating factor. But overall, we see how the stock price is starting to recover. I think what we're starting to see is a reversal of the trend. I'm not particularly um, keen on entering at this stage, although we could. But I do think that this stock will be very, very hot in 2025, with plenty of opportunities to enter, because 2026 is also expected to be very, very strong for the company. So, onto the structure. So, if we wanted to enter now, we could try to get some exposure to the earnings and try to capture some of that upside now. So diagonal could be a way to go here. Uh, Obviously at a higher strike. It's currently at 85. And I think that if the next earnings report is good, we could see the stock at about 20 or above. The price target that I'm looking in the near term is somewhere between 22.5 to 25. So probably we'll be buying the 20s at 145. This actually moved quite a bit already since I first looked at it. And sell the December's, the 22.5 at $50. Assuming 22.5 price target by the end of December, our return on that is almost 400%. And of course, we could have the December expiry. We're doing this on a one-to-one with the ability to restructure into a vertical for January at probably around another 40 to 50 cents. That, assuming a target of 25 times, would provide us with a return of almost 30 times. That's it for today. Hope you enjoyed the video. See you soon.